Hi guys, Ken Chigbo, aka Ken FX Freak, back with another week roundup and look ahead to the key events. Now, guys, you would have seen last week was a bit choppy in the markets, right? We had dollar down, then dollar up, then dollar down again. Now, as you can see behind me, this is the dollar index, right, or here. We finished in the red. That's 2 consecutive weeks in the red. Now, why did we finish in negative territory for the dollar? We finished in negative territory because there's a few reasons. One, US fiscal stimulus. Politicians are talking. They're trying to agree a deal to pump some stimulus into the needed economy, okay, for companies and consumers to help keep the economy buoyant after the knock from COVID. And then 2, something that's also helping general good mood in the market, risk on, risk appetite. So it means safe haven weakness, dollar weakness, yen weakness, whereas everything else rallying, and stocks. Why? Because Joe Biden is now actually seen as a more positive for market sentiment because he's not going to be pursuing tariffs on China. If anything, he'll look at bettering relationships with China. Remember, if US and China are clashing, it's not good for market sentiment. And Trump said in his second term, if he is re-elected, he will look at tariffs again on China, which is not good. But Joe Biden is seen as more positive. He'll spend more on bettering relationships with China rather than fighting. So those are all the reasons why we saw dollar down. Now, as you can see here, the dollar index on the daily chart, we broke this key supporting trend line. As you can see, breakout, making way for some further downside for the dollar. So the dollar's peers like Euro, GBP, Aussie, NZD, CAD, all have room to strengthen for the time being, but we are approaching some real key levels. I think what's on my watch list this week is GBP. I'm expecting some nice strength for GBP because we've got the Brexit talks, the summit, and I think that they're going to go well. Okay, there's a lot of optimism right now. So with GU, we broke out this pennant structure here. I'm still looking for some upside. So I'd either be looking for longs from around on a retest of around 130, or watch out for a breakout and retest of this 50% Fibonacci. So from longs, even from 130, 80 to 90, in towards 132, okay, where the 61.8% Fibonacci is. Same with GJ. We broke out of a flag structure. Can you see here? We broke out, we retested that. So I'll be looking for longs from 137.30 or from 137.90 with targets of 139. Again, that's 61.8% Fibonacci, and that'll be on optimism that something can get done this week between Britain and the EU. What else is on my watch list? I like US stocks. So this is Dow Jones. We broke out of this pennant structure. Now, there's still opportunity to get in for some longs, by the way, guys. I'll be looking for re-entries again around this sort of 2850 area. If we can break out of that, retest, so 28,650, excuse me, with longs at 29,100 as a target up here, the highs of September. You can see that nice and clearly on the daily that could potentially be a double top formation. 1, 2. If we double top that, the neckline back down here around 26,500, and then that'll make way for a big drop to the downside. Okay, so anyway, this week I'm expecting more risk on. So upside still for NZD, as you can see here on the 4-hour. Still some upside here for AUD, right? Even some upside for Euro, okay? Just all taking advantage of the dollar weakness, given this risk on, this good market tone right now. That's everything from me. Have an amazing week. Thank you.